Hey guys, good to have you here. Monday market is open. There are some stocks that are getting hit pretty hard, and there is some liquidation going on. And there's a good story behind this and an important story behind this. So what I want to do is go through the stocks that are getting hit hard and talk a little bit about what's going on, and also talk about the environment that we are investing in. So let me do this. Let me pop over and show you the first chart I want to show you. It's Baidu. And you can see that this has fallen actually pretty big. It is down 40%. Now let's just keep this in reference, or let's put this in reference that it's up 300%. So it's up 300% in a year, and it's down 40% for right now. So first of all, I just want to state that if something's up 3, 4, 5, 10, 20x, right? 3x, 4x, 5x, 10x, 20x, having it correct 40 or 50% is actually a common correction. Now, there's been a lot of block trade sell-offs. So basically what's going on, first of all, no one knows yet. This is not the end of the market. These are certain stocks that are getting hit. And what I want to do is look at some of these stocks that are getting hit right now and seeing which ones are potentially stopping the fall and could be a good entry point. So I'm going to just start with Baidu. It's one of the larger ones, $56 billion. And the first thing I notice is just notice the support resistance going back. And when you learn to read price charts, one of the first things I train my investors or my traders to do is to see where all the buyers and sellers are hiding. That's where I believe the support and resistance is. So you can see that Baidu got above that top blue line, but it couldn't hold it. If you see that, it couldn't hold above, and it came back into the range, and now it's in the range. And I could extend the range down here, and the price is still below it. So having the price below the range, that is more negative than positive. Now, sometimes clearly it whipsawed and it had that false breakout on the top. And so the question is this going to be a false breakout on the bottom? And it is not broken down. It is really fighting right now at this kind of 204 price. But Baidu really has been taken out. And it was falling before end of last week. And like I said, it's been up 300%, and now it's in a 40% correction, which, again, I know is painful, especially if you bought it at $340. But a 40 or 50% correction on a stock that's up 3, 4, 5, 10x in 1 year should be expected. So Baidu is getting taken out. And again, the talk on the street is there's a lot of these block trades that are hitting the market. A block trade is a very large amount of shares that hits the market at once. Oftentimes, a block trade price is negotiated before it hits the market. So we don't know if there's margin desks that are being hit, but it's certainly affecting other people around the world. So let's look at a couple other ones. Discovery had a huge fall. Now this one's slightly different from Baidu because here's the resistance support on Discovery Inc., right? So it's way above that still. And as far as the correction, as far as the move goes, this thing was up 300% in 6 months, not 12 months, but 6 months. And in fact, I'm counting here, 1, 2, 3, 4. It was up 300% in 4.5 months. So this correction right now, it's 46%. Again, something being up 300% in less than 5 months. Again, one should expect a 40 or 50% correction. But what's interesting about this is has it stopped falling here? Like right where, if you can see this back in January of this year, it had this little correction right here. Right now, that's where it's stopped falling. So the question is, once it breaks above there, that could be a buy point. Here's the interesting thing. If it does break above, let's call it $44, and then it falls below, call it 39, that's a 10% loss. Okay. The upside, the place you'd want to get to again is to the top again, which is about a 7-to-1 return. So you're risking, say, 10 cents on the bottom, right? Or if you put $10 in, you're risking $1. If it breaks below that, you're out. But your potential gain is $7. So that's a pretty good risk to reward. So that's Discovery. Viacom also got hit pretty hard. Viacom is right back into its old support resistance. So check this out. This is where Viacom could not get above. It could not break above kind of this, let's call it $52. Just couldn't do it. Finally, it absolutely broke below the 35, which it couldn't get below 35 until the COVID crash, and it did. And even notice the hesitation to break back above that $35, $36, $37 range. And then when it did, it absolutely took off. But again, Viacom is back into this previous resistance, right? Call it $52. So if you wanted to go long Viacom, man, I would wait until it breaks above $52 because I call these weather storms that it's in. A lot of turbulence, a lot of bumpiness, a lot of sideways, and it's just a lot of junk to deal with, buyers and sellers hiding all over the place. But what we do know is $52 on Viacom is important, and $35 is important on Viacom. And we don't need to rush this, right? We can just wait until it breaks above 52 and buy at 52. Now, if you buy above 52, the first thing you absolutely needed to do is break above this little point right here, this 55er here. But again, this is a well-defined trade if you do trading, because you can just say you're wrong if it breaks below this bottom right here. So these are pretty tight trades, but it's well-defined. It's a well-defined risk reward. So that's Viacom, and that got hit pretty hard too. Okay, Tencent Music got hit. This is coming back, and this has a well-defined support resistance that's right about here. First of all, it does not need to come back down to that $19. It doesn't, right? Right now you can see it stopped at about $20. But the well-defined support resistance was definitely this $19 range. It stopped above that. Now this is just the price chart I'm looking at right now is just daily. I'm not showing candlesticks. I'm not showing intraday. So it'd be interesting if we looked intraday to see if what happened if it actually did touch down to this $19. And maybe we can do that in a little bit. But definitely this has been hit pretty hard. I want to see what Tencent Music's up since the COVID bottom. Yeah, it's up 2.4x. And so let's see what this correction is here. That's a 37% correction. Again, it had a beautiful consolidation here, or just noticing another consolidation. That's a false breakout. It broke up and then broke below. So there is so much volatility going on right now. And I know there's a lot of political talk right now about the transparency of Chinese stocks, not having the Chinese Communist Party on the board of some of these stocks. This is, I believe, registered or listed in the US, but still it's a Chinese stock. So that's the resistance support we're looking for. It's above it. So this may have some little bit more risk. But again, if we look in it, there may be a nice little tail into that $19. A couple of other stocks that got really pushed down. Fartek. These are all very similar in size too. It's much harder to move around a $500 billion stock. So this thing has been on fire from the COVID bottom. It actually bottomed a little later than everything else, but this was up 1,000% or 10x in a year. And right now it's down 33%. So I'd expect this to fall a little bit more. I see some little bit support resistance here, but really the major number is $30. Don't be surprised if this does drop to $30. Again, this thing's up 1,000% or 10 times in actually less than a year, about 10 or 11 months, which is pretty impressive that it has moved that much. But you see this huge kind of resistance support in here. But again, the big number on Fartek is really that $30. And the nice thing about this is you don't have to buy any of this. You don't have to do any of this. You can just pretend to do it. Though doing paper trading is not that valuable because you never get your brain involved. You never get your emotions involved. So I would never suggest so in paper trade. But what you could do is put $1,000 in and trade it and do it how you're supposed to do it and see how you go. Okay, this one's quite interesting to me. I'm not going to attempt to pronounce this Iqiya. I'm sure someone would love to tell me how it is, but notice huge resistance at the $27 to $28. And then down here, we have just amazing support. So it doesn't spend a lot of time below 16 bucks. Now you can tighten it a little bit and do that. You can actually lengthen it and kind of say, where's the highest price that it doesn't spend time below, right? So if we put the price here, how much time does this stock hang out below $17? And if you look on the chart over the last 2.5, 3 years, you can tell it actually does not spend most time below the 17. It comes down there, but buyers come in below that 17 bucks. Unfortunately, or fortunately, sellers come in as soon as it hits 28. So this literally could be at least a right now, buy at 17, sell at 28. That's not that bad. Let's see what that gain would be. That's about a 65% gain. If you bought at 17 bucks, you'd have to say you're wrong if it closes below 15. Again, well defined, right? You can risk 13% to potentially make 60%. Let's call that a 4.5 to 1. Risk $1 to make $4.5. That's a pretty good risk to reward ratio. So I like that. Couple more here that caught my attention with this big sell-off. GSX, again, a $4.5 billion stock now. This was kind of interesting because from the COVID bottom, it didn't really have that big of a correction here, right? If you look at the top of the market was February 19th, the bottom was May 23rd. So that was the sell-off right there between the two blue lines for basically the entire world, but not for GSX. You would have no idea that there was a COVID crash if you would have owned GSX and only. Now, it did then correct down. Let's see what this correction is, 32%, which I gotta say, 32% correction, and the move before was 4x. That was a really calm correction. But now you have GSX back in this range here. It's back in the range, and man, it looks like it wants to come down to $30 and see if buyers are there again. I'm just kind of highlighting this right here. It's right in the middle of the storm. If you can see that, it's right in the middle of the storm. Again, where you'd want to buy this potentially is either a break right above kind of the 45, or you could buy it right down at that $30 mark. Very interesting, super liquid, 44 million shares being traded on such a small stock. Okay, one more to wrap this up. Here's a pretty big one. I wasn't checking the market cap on everything, but here's Shopify right here. I think this is our first 100 billion plus stock that got hit a little bit. But I got to tell you, it didn't get hit that badly. Going into 2020, going into 2021, the second half of 2020 was just sideways. And it's back into that sideways channel, right? So if you kind of think of this as Shopify sideways channels, basically, let's call it between 880 and 1140, and it's back into that. I would not buy this until it either came back down here. I'm not predicting it will, but again, you can just wait for, if you're watching 10 or 15 positions, you can wait for one or two of them to come to where your buy is. So you could buy it down at, let's call it 880. And we know for sure it wants to get to 1140, but it's very likely that was a false breakout in February of this year, just a little while ago, but not really falling that badly. I want to see how much this is down. It's down 29%. And during, let's call it the COVID bottom up to this correction, it's up about a little under, let's call it 360%, so 3.6x. Pretty impressive. Couple things to take away. We don't know if this mass selling or this selective selling is done. We don't know that. And really what I'm doing right now is talking about kind of the trading mentality. But whether you are trading or whether you're investing, your key job is to not care. And I know you want to care about your portfolio, and you should care about your portfolio size. But what I mean by not caring is not caring what you own and not caring how long you own it. Because we don't know how long you're going to own it. And this is why these support and resistance levels are so important, right? Because they tell us where some of the buyers are and where some of the sellers are. Now, with these block trades that have just been absolutely slamming the market over the last couple of days, margin desks don't care about support resistance lines. The men and women who are told to sell X amount of shares, 1,000 shares, 10,000 shares, 1,000,000 shares, they're just told to liquidate the shares. They're not looking for support and resistance lines. But what often happens is you will get a company that has well-defined support resistance lines, like Tencent Music, clearly kind of right around that $19. That's where it broke out in a big way. And again, you can just watch it and see if it hits that, so you can do that from a trade. The key is to practice detachment, and you do that by having a good checklist, a good procedure. Thanks, guys. I hope you like this. If you do like this, you will love my free course. It's absolutely free, and I go through 3 of the main principles that almost no one is taught, so you can just go ahead and check that out in the notes. Thanks so much, guys. Appreciate you being in my world. And again, if you like this, you're going to love that free training for you, absolutely free, and the other videos I have for you. You guys take care, and I will see you on the next